Good morning. My name is Ted Gallivan, and I'm the Assistant Commissioner of the Compliance Programs Branch at the CRA. I'd like to welcome you to a session on tax administration in the era of COVID. I'd also like to thank the organizers of Tax Co-op for welcoming myself and two colleagues here this morning. We see this session as an interactive discussion of some of the line of sight and perspectives that tax administrators had coming into COVID through the spring and summer of 2020, and what some of our perspectives are coming forward. I'd like to discuss with you what we see as the issues, opportunities at a practical level. We see this in three parts, starting with up to spring of 2020, before the world changed for all of us, how we've experienced the first 6 months of this era, and some thoughts the three of us have coming forward. Now, I'd like to introduce two colleagues who've joined me today. My first colleague is Harry Gill.
Hi there, Harry Gill. I'm the Director General of the Small and Medium Enterprises Directorate. So essentially think audit programs for small and medium enterprises on the income tax side.
I'd also like to introduce Ms. Alexandra MacLean.
Hi there. I'm Alexandra MacLean. I'm the Director General of International and Large Business Audit. Come from Department of Finance originally. So tax policy focus for a number of years, but embraced the audit and administration side for sure. So thanks, Ted.
Thank you, colleagues. And so for participants, roughly 75 years of tax experience from the three of us. And in addition to our domestic roles within Canada, Alex plays a leadership role with the large business network of the FTA, the OECD. Harry and his team leading a lot of work internationally. And I support our commissioner, Bob Hamilton, of the Canada Revenue Agency, who's the chair of the Forum on Tax Administration of the OECD. And so some of our perspectives will not just be what we see in Canada domestically, but also influenced by our work with colleagues around the world. So coming into spring 2020, what were some of the top line ideas or thoughts that we had? One big thought we had in tax administration was service and compliance, kind of a people first type philosophy, but then more importantly, how to apply that in an audit context, how to apply that in a context where you're dealing with multinationals, and how do you take this focus on kind of doing better as a tax authority, giving better service in a more rights-based context that we have with some of our clients. And what we had found was kind of areas of shared interest around timeliness. We'd found perhaps common ground on technical accuracy and really focusing on the technical accuracy of our work, a little bit on transparency. And we thought, if an organization like the Canada Revenue Agency was going to have a service focus, it was really important to cast it in a way so that an audit workforce, a workforce trying to make sure that people pay their fair share, doesn't misinterpret that. And so we were spending a lot of time around that, and again, trying to find things that would be helpful, but would still ensure the fairness of the regime. We're doing selective work with stakeholders, stakeholders and the agency kind of having common cause on some things. Tax certainty, for example, you could think of double taxation in the case of two high tax jurisdictions. And, I think all reasonable people can agree in two very high tax jurisdictions, multinationals shouldn't be facing double tax in that context. And so, MAPs and APAs and finding a way to give a little bit of certainty for those who really were facing legitimate double taxation. Some of the work on Pillar 1 and Pillar 2 that Alex may mention at the OECD to kind of understand the new economy and what modes of taxation would be appropriate for that. We were doing some early thinking on using data for preventative purposes. And so kind of, again, in a service bent, how could we use the data that we've been using for audit file selection and kind of pivot and use it to prevent non-compliance from possibly happening in the first place. And then again, in terms of global collaboration, at the level of best practice and sharing best practice amongst countries. More domestically in Canada, the current Liberal government had come in 2015 with a focus on cracking down. And we were messaging out what we saw as a tactical success. Very much a case of the agency starting the right tax audits of the right taxpayers, more aggressive taxpayers. We'd roughly doubled the average dollars at play in our audits. a stream of litigation, which I'll come to in a second, but very much the gross amount of dollars that we were identifying was on the upswing, which in a tactical way was progress, but a lot of that then landing at the courts, and the taxpayers' reaction to that crackdown was interesting. A lot more litigation during the audit phase, and a lot of taxpayers kind of resisting our attempts to audit them procedurally and trying to attrit the quality of the audit, and then in many cases in the same file from the same taxpayers and reps litigating the tax assessment and challenging it through the court system. And that's created certainly a backlog in court, and so some insight for people in terms of the fairness of tax regimes and the limits of using the tax administration. A tougher posture from the tax administration predictably has led to some pressure within the court regime. Some of the tools we've used and some of the successes, certainly an increase in automatic exchange of information. And so globally, tax authorities have always shared information, and many of you will be familiar with the measures. But I think from our perspective is the automatic across the board sharing, which hopefully has some slight deterrent impact, but also really gives data to the tax authority, both for file selection and risk assessment in the case of country by country reports, or in the case of common reporting standard and worldwide bank information, some pretty good line of sight on people's net worth and holdings internationally. And so, that data exchange, very useful for detect and catching, and increasingly so. But back to a service space, for those not doing aggressive tax planning, how might we use that to prevent non-compliance? And then finally, I would say some increased work on TaxCAP in Canada, a lot of pressure to calculate it. And Canada had just finished a series of reports on TaxCAP to estimate it, obviously more art than science, but kind of laying out sales tax, income tax, multinationals, individual taxpayers offshore, and trying to lay out kind of an ecosystem of various tax gaps. And that'll become relevant, I think, as we kind of move into COVID. And so really those were the top line ideas or thoughts from the compliance function in Canada, kind of coming into spring 2020. Now I'll give a chance to first Harry from the small and medium enterprise, more service and helpful angle, and then Alex, secondly, from the large and international angle, to talk a bit about kind of their priorities and the status kind of coming into COVID. So maybe you first, Harry.
Okay, sure. Thank you very much, Ted. So, as Ted said, that we had been heading in this direction, this new vision to transform our programs and services, sort of to better meet the needs and expectations of taxpayers and businesses, to be seen as trusted, fair, and helpful. The tone was set from senior management and at the political level, as Ted mentioned, starting right with the minister's mandate letter the first time around in 2015. More recently, we've been talking more about adopting the people first philosophy, which is not only important for individuals, but also for businesses, and particularly in the small and medium sector. When it comes to compliance at the CRA, people first, we just want to make sure people understand that it does not mean that we're being lenient or turning a blind eye in any way to non-compliance or those deliberately sort of, flouting tax laws. The objective of People First is to support and improve voluntary compliance and to help ensure that all taxpayers are treated fairly. And that certainly includes addressing non-compliance and using the legislative tools that we have available, including penalties, for example. So Ted touched on the three T's, sort of these three core principles that we've adopted in the compliance programs branch of CRA, of timeliness, technical accuracy, and transparency. And maybe I'll just dive into them a little bit deeper to explain what that philosophy really means for us. So timeliness, it means being effective and efficient by taking the right steps at the right time, being clear in the expectations of timelines with taxpayers, and adapting and tailoring our approaches based on the circumstances of the business that we are auditing. It means not spending an unnecessary amount of time on files where the non-compliance is negligible. We want to get out of audits where there's little potential and free up those extra hours to really spend them on where there is serious non-compliance. Timeliness was actually identified as an area of concern during a recent audit we have had by the Auditor General of Canada. And as a result, we've made some tangible changes, really setting some clear timelines and issuing some instructions to auditors about those timelines. A lot of times the slow audits are out of our control. It might be because of delays from the taxpayer or getting information from third parties like banks. But to the extent that we can control it, we think that timeliness is an early certainty for taxpayers is a cornerstone of running a good audit program. On technical accuracy, this means that we're always striving for accuracy, certainty, and consistency within our audits. And this starts with the technical competency of our workforce. So we've done a number of things to improve the technical skills of our small and medium auditors. And we know it's these auditors that graduate up and eventually will be auditing the files, let's say in Alex's space, in the international and large space. So it's imperative that we support their professional development early on and throughout their career. We've done things like, lowering the span of controls for frontline supervisors so they can spend more time with their auditors, better supervise them and mentor them. Improve training, real-time training, electronic methods of delivering training in today's world. We're moving in the small and medium space towards team audits and looking at group risk assessing, corporate groups, as opposed to file by file and one auditor per file. As we start to change our risk assessment to look at these more complex structures, this team approach is not only going to help weed out addressing non-compliance, but it's also going to help to develop our junior staff. Transparency. By this, we mean being open and forthcoming with taxpayers. It means promoting proactive disclosure of information during an audit and contributing to a no-surprise environment for taxpayers. We encourage our auditors to share their reports and analyses with taxpayers to ensure they understand our assessing positions clearly. In the past, we've sometimes heard, particularly from businesses maybe that aren't represented, smaller businesses, that, I don't even understand the calculations or the assessing position. So it's hard for them to, let's say, formulate an objection or to even file an appeal. So our message to auditors is, if you're doing your due diligence and you're documenting the file well, there should be no reason not to voluntarily share information. Before the pandemic, we were, and we continue to make significant efforts to orient our audits or our audit efforts towards the most serious cases of non-compliance. And we use alternative approaches for businesses that want to comply, but maybe they just need some help or they need a nudge. In other words, the goal is to match the intervention to the need and the risk level of the business and to get out of the way of businesses that want to comply or have the ability to comply on their own. One area of focus, Ted touched on it a bit earlier, I think, with data, which is a real enabler for us to target our interventions, is the use of advanced analytics and approaches such as machine learning and predictive modeling. An important part of our data analytics and risk assessment programs is the use of third-party data. So we get many sources. Ted talked about some of them before, and the electronic fund transfers, common reporting standards, stuff from other governments. In the small and medium sector, information from provincial governments is actually a very important source for us. We've got a very cooperative and productive relationship with the provinces. A good example would be the data that we receive from the Ministry of Finance in British Columbia. A number of recent measures that have been passed in that province, such as a speculation and vacancy tax around real estate and the Landowner Transparency Act, have led to enhanced information sharing opportunities. And all this information that we receive is key in identifying and addressing non-compliance. Real estate, we do it in a number of fronts, and real estate is probably just the most visible example right now. We have other tools as well, such as unnamed persons requirements, or UPRs. It's where the courts authorize and enable the CRA to obtain third-party information from an individual or a company about third parties who are unnamed. After the CRA gets this information, we can verify the unnamed persons correctly reported their income or remitted their GST, HST, for example. In recent years, we've been concerned with people flipping condos. So it's been a great tool to go to builders, or condo companies and get this third-party information. A little bit about the education approach that I touched on earlier. We want to broaden our reach and focus on our precious audit resources, as I said, on the most serious cases of non-compliance. So some of the things we've done, we have a liaison officer program. It's dedicated officers at CRA who reach out to small business owners and offer them support in helping understand their tax obligations. This program is really gaining traction. In fact, we expanded it to incorporated businesses last year. We work with industry associations and other industry stakeholders, as Ted had mentioned. We also use letter writing and nudge campaigns. These campaigns have included advice tailored for specific industries or on specific subjects, including information about common errors made in tax returns, good record-keeping practices, and things of that nature. So we intend to continue down this education first path for those who want to comply. So I'm going to stop there for the first segment. That kind of brings us up to what our priorities were in the small and medium space heading into COVID. And then I'll be back after to talk about what happened when the pandemic struck.
Thanks, Harry. It certainly sounds like you're trying to help businesses that are willing to comply voluntarily, and a bit of a help and prevention focus on those people that are kind of less serious and not as aggressive. Perhaps a different tone from Alex, dealing with multinationals in the large and international space. Over to you, Alex.
Thanks, Ted. So pre-COVID, I viewed my mandate essentially as coming as close as we could get to ensuring that large businesses were paying the statutory rate, the statutory corporate tax rate on their income as determined under the tax laws. I guess I'd say read reasonably. So that kept me pretty busy. Multinationals and large corporations in general are pretty bottom line oriented in my experience in my role. And they have a lot of resources that they dedicate to paying as little tax as the law allows. So that sets up a kind of a challenging dynamic for us in international and large business audit. Less focused, and Harry spoke a lot about helping businesses who want to comply. Businesses in my space are quite compliant typically, and they have the resources to be compliant in the sense of making sure that they are onside the rules from a technical perspective. What they tend to do is apply the rules as aggressively, well, not in all cases, but many of our customers apply the rules relatively aggressively to achieve a good outcome for their shareholders. So that's kind of conflicts with my mandate. So, but coming back to the 3 T's, timeliness, technical accuracy, I read that one as technical expertise for my people. It's making sure auditors have the training that they need to understand the structures that they're seeing, improving communications among auditors across the country, because often they're seeing the same structures, but they don't know that they're seeing the same structures. So developing common approaches, common assessing positions to address common structures being promoted and rolled out for various businesses by the tax firms. So that was a lot of what we were doing pre-COVID. Some other things we had underway on the sort of litigation side. A lot of our files, as Ted mentioned, go to litigation. So that means they have to be well prepared so that they can succeed, so that we can win the court cases, just to put it bluntly. So we've been working on bringing legal expertise into the files much earlier in the process, so that the lawyers who would later be arguing the cases were familiar with the facts from the beginning, from before we even got to the appeal stage. So that program was going quite well and starting to bear some fruit for us, although early days. We've been trying to resolve files earlier where we can, especially where we can get the taxpayer to wind up the structure. So that way it's less of a year by year, you go in, you make the audit adjustment, and then you go in the next year and you make the same audit adjustment. And the taxpayer hopes maybe they might not be audited the 3rd year, but if we're on our game, we would audit you the 3rd year. And just it wasn't the most effective approach to achieving tax compliance in this sector. So working with large taxpayers to convince them to stop doing what they were doing, wind those structures up, so that we don't have to spend as much audit time on them and time in court. So mentioned time a few times in the past 2 minutes or so. Large business audits take an awfully long time historically. Also, the MAP and APA process, which is in my area through Competent Authority Services, takes a really long time. And over the period of an audit or any kind of tax compliance, you get changes in employees, you get changes in accounting systems, so people's memories fade. And if it's going to be litigated, down the road. And, you know, these days, that's typically 10 years after the transactions took place. It just makes it challenging for both sides to figure out what actually happened. And it's not a very efficient way to keep the rules current as well, because I guess I see part of my role as identifying tax planning structures promptly and conveying that information to tax policy area at Department of Finance, so that they're in a better position to have intelligence on things that are frankly loopholes in the system that should be addressed as time permits for Department of Finance. So on the earlier resolution front, we have been running a committee called Audit File Resolution Committee, which enables us to, as I mentioned, address structures and hopefully get concurrence from the taxpayer, get them wound up, and move on to other taxpayers. Another big part of the landscape for me in large business audit pre-COVID, it was the sort of the continuation of BEPS, Pillar 1 and Pillar 2, as Ted mentioned. Watching all that, you know, keeping up to date, transfer pricing kept us very busy pre-COVID, but there's a lot of moving parts and expectations for change in the system. So there's a growing consensus that the international tax system is not working well, I think, for policymakers in various countries. And we've got Pillar 1 and Pillar 2 blueprints released just this week. But we don't yet have consensus on the solutions. So it's a complicated landscape going forward, or we thought it was pre-COVID. And then middle of March 2020 arrived. And maybe I'll stop there and turn it back over to Ted.
Great, thanks, Alex. So I think, you know, what we're hearing is some similarities. You know, greater focus from us around outcomes, getting to the right outcome. Maybe less of a concern about year over year and more strategic kind of go forward focus, but then some important differences. You know, small and medium audit kind of branching out to outreach, to service and help, and perhaps large business branching out into kind of pre-litigation and certainly getting equipped for rights based. So that kind of brings us to March of 2020. And like many tax authorities, like many governments around the world, the Canadian government was certainly pushed into a whole bunch of different type approaches. One is just a faster pace. Some of the emergency programs went from idea to legislation to administration, and by that I mean tens of billions of dollars being paid out to audit and compliance all within 6 months, which would have been unthinkable in the past. And I think it remains to be seen whether that pace is sustainable or not in the long run or across multiple programs, but certainly a faster pace coming out of the CRA. Parliament a little more closely engaged with senior officials, with the government in terms of the accelerated passing, consideration and passing. And so that relationship between kind of a government, elected officials, stakeholders, giving testimony, and the parliamentary committee structure, I think was intensified in that period. And it remains to be seen whether that intensity of working together towards a shared purpose will remain, and can it be applied to other shared objectives in the future. I think the kind of nature of payout programs led us to see some taxpayers and stakeholders differently. I think this kind of zone of shared interest with some in the accounting community and the legal community was more obvious, that many people were just trying to get it right. And then in another case, it was more obvious that some people were simply trying to game the system and take advantage of loopholes, even within brand new programs. And so the vast majority of people, I think, trying to be fair and follow both the spirit and the wording, but certain other stakeholders kind of stood out in terms of their aggressivity. I think the global community brought closer together again, less theoretical, more practical sharing of best practice between tax authorities, both managing our own workforces and emergency measures, and questions around, how to enforce compliance in a fragile economic state. Really excellent work by the two colleagues here with me today and the rest of the agency in terms of supporting the economy, but also kind of staying steady state on the highest risk files, which we've done. I think if you saw the trend in the earlier remarks, kind of us getting a sense of either within large business differentiating between the aggressive and the not aggressive, and then between large and medium and small, and being more comfortable with different behaviors receiving different treatments. Certainly the emergency measures showed that. Hundreds of thousands of Canadians mistakenly double-dipped and received 2 checks and returned one of the duplicate checks. And so you can see these different categories of taxpayers that we have to deal with, and kind of we as administrators need to kind of customize our approach to the behavior of the taxpayer. I think the tax gap is taking on new context. Certainly with emergency spending, governments around the world have had to spend. And so, the theoretical gap between if everybody paid the statutory rate, how much is paid voluntarily and how much does the compliance function have to find, I think has been accelerated. And now I think there's an increased tax gap with a lot of countries going to be having to be focused on debt and deficit going forward. And so I think putting common cause between the fairness concerns around are people paying their fair share and kind of needing the funds for expenditure. And so an expectation that that'll be certainly a more intense focus kind of moving forward. And so both Harry and Alex had kind of front row seats to some of the pandemic measures. And so perhaps starting with Harry and then Alex, hear a bit more about how your taxpayer populations were coping and how you were managing through the March to September 2020 period. Harry?
Okay, sure, Ted. So yeah, starting in March 2020, all CRA employees essentially ordered to stay at home, much like many other entities. All audit programs were stopped at that time. Right from the onset, many of our auditors volunteered to support the emergency relief sort of programs. So, we had this pool of staff, so several thousand auditors in our branch, say 9,000 auditors or 10,000 auditors, give or take, that weren't working. So they were available to work, but it was kind of an unprecedented thing. The brand new programs, brand new legislation, new IT systems, and we mobilized staff very, very quick. I think our branch put forward something like 3,000 auditors to help out with phone lines for the Canada Emergency Response Benefit and the Canada Emergency Wage Subsidy, and then also helping out with some validation work on the wage subsidy as well. And in fact, a significant portion of our audit workforce, probably more on the small and medium size side of the house as opposed to international and large, is still working on those COVID-19 relief measures. And it's important that they continue for the greater good of the agency and for Canadians. We've sort of said that work is priority, and we will start to bring people back into the audit stream as they free up from that workload. One of our programs, however, did resume very quickly back in April, and that was the liaison officer program that I spoke to you a little bit earlier about it a bit earlier. It was repurposed, that program, from being a program that reaches out to talk to people about how they can comply and what information they need to do their taxes and whatnot, to informing business owners proactively about the government's relief measures. And the wage subsidy certainly was a big one about that, but people had questions about other government programs, even ones that were administered by other government departments. By June, we started resuming audits in the small and medium sector, well, all audits, but in the small and medium sector as well. Initially, our focus was to resume audits that would result in a refund or credit. We didn't want to hold up money that was owed to Canadians for businesses, whether they'd filed a taxpayer request or if there was some other reason why they were expecting a refund. We also resumed, as Ted said, high-risk audits. Audits that had a significant financial risk for the government, files where maybe the level of non-compliance was very significant. Maybe it was a taxpayer that had a history of being non-compliant. We were mindful, obviously, of the economy and the impact on businesses, but at the same time, there was a whole level playing field, integrity of the tax system, revenues required to pay for programs, et cetera, et cetera. So we did take a balanced approach starting back in June. There were many challenges we had to overcome for sure in working in this new reality, managing a remote workforce, and all the issues about IT capacity and security, providing our employees across the country with computers, cell phones, the tools to stay connected. We had to rethink how we conduct audits, and a lot of that thinking is still going on, and we're not certainly all the way there yet, and things keep changing as well. So it will continue to evolve. But until this point in audit, we had relied heavily on traditional audit approaches, which included in-person visits, which aren't really possible or conducive anymore to any great extent. We were still using landline telephones at our auditors' desks in our office towers. Paper mail was still quite frequent in communication with taxpayers. So, the security protocols and procedures had to be reviewed and implemented, and decisions were made kind of on the fly. Ted talked a little bit about how we sort of mobilize things very quickly. Decisions were made that normally in a government environment can take quite some time. They were done very, very quickly. So I think I'll stop there in terms of that sort of the COVID period. And then maybe in the next bit, I'll talk about the current period and what we're going to do going forward.
Thanks, Harry. And yeah, definitely a different vibe as we were called to support businesses and pay out billions of dollars in relief, sometimes to the same businesses that we were collecting money from. And it certainly would have played out in Alex's space as well. Alex?
Thanks, Ted. So yeah, I think back to the very beginning of the pandemic, the crisis. Things were very unsettled in financial markets, commercial paper, and so forth. So there was a lot of uncertainty and pressure from large taxpayers who had various needs and had a lot of difficulty in those first days figuring out who they could talk to, because a lot of our staff had all been sent home, and our systems, which we got in place quite quickly in terms of cell phones and email communication, weren't there in those first weeks. So there was a lot of scrambling to address some of those acute pressures where possible. So I found out things like CRA had pre-existing guidance on when it was acceptable to refund corporate tax installments, for example. So we were able to put that guidance into action for some taxpayers. We quickly identified an issue with statute barring. We were going to have to process some files because we did have an eye on the future, that the economy might come back, and it would come back at some stage, and that we would have a need for revenue going forward. So some files were going statute barred quickly, and we needed folks to process those audit adjustments before the deadline passed. So we had to develop a system to manage that involved a CRA official that Ted knew in Prince Edward Island, who was able to go into the office to actually issue reassessment notices. So we got quite a number of files salvaged that way, as we identified for policymakers the desirability of addressing the statute barring issue, which eventually contributed to the Time Limits and Other Periods Act. So I think Harry's touched on the need to switch our audit teams to using cell phones, getting them remote access. All of that took quite a bit of work and was sort of my initial focus. And then the Canadian Emergency Wage Subsidy came along sort of in April, and had to down tools. My job changed a lot to assist in developing that, getting that program up and running, and trying to find a balance between getting the money to very needy employers so that they could keep employees on staff or rehire them as quickly as possible, getting the money to them, but making sure that we were guarding against the risk of fraud, abuse, and ineligible claimants, as it were. So that required kind of a two-pronged approach where files were examined on an automated way, and a number of them were diverted for manual examination prepayment based on characteristics. Tried to do that usually within 72 hours and get the money out the door where things checked out. We're now in the middle of running what we're calling phase 1 of our auditing of wage subsidy. And I think we've got some innovative aspects there. First of all, it's innovative that we're doing it now. We're not waiting for the end of the year. We have the information in the applications. Taxpayers have the information that they use to prepare their applications. And that issue of turnover of employees and memories failing and all of that isn't at play yet. So we want to get as much as we can the audit work for the wage subsidy done as close to real time as we can this time around, and take away lessons from that experience, hopefully, and bring them back to the income tax auditing program more generally. So far, phase 1 is going pretty well from our perspective at CRA, and the level of compliance and the quality of the files in international and large business is quite good. I think Harry mentioned we had to train auditors on a whole new regime. And it's a regime that's evolving, the wage subsidy program. I had changes announced in the summer and enacted in the summer, and recently announced extension to 2021. So that's what's been going on with the wage subsidy. I guess another area or topic that fell to International and Large Business Directorate was preparing Canada's international guidance on tax matters related to travel restrictions. And there's quite a few issues, situations, corporate tax residency, individual residency, cross-border employment situations, withholding tax, disposition of taxable Canadian property. All those things depend on the location of individuals for periods of time. And our initial stance during the crisis was to try to accommodate things that were well outside the control of individuals and businesses. So our guidance applied from the beginning of the crisis essentially until September 30th. We now have a case-by-case procedure set up with a mailbox where you can write to us to ask your questions, because we are concerned that we don't want our guidance used to facilitate tax avoidance. So there's a little bit of tension now in the guidance between wanting to be accommodating, but at the same time, at some stage, you need to recognize that there are people on the ground in Canada using Canadian resources and participating in Canadian society, and probably at some stage they ought to be treated like Canadian residents. And so I think all governments are looking at these issues currently. So that's a little taste of what we've been up to in international and large business since the COVID crisis began. And I think I'll turn it back over to Ted.
Thanks, Alex. And, I think at this conference, perhaps this year, certainly in prior years, the question of morality and tax has come up. And, we're not going to get into that. We're tax officials. We administer the law. But I think materiality is something that we're getting more and more comfortable with. And also, and letting materiality judge our reaction, and also letting the taxpayer's own behavior kind of dictate the response from the tax authorities. So you heard Alex talk a bit about how, on the one hand, if you voluntarily made installment payments and have a legal right to that, well, we're going to look at the criteria, and to the extent you have a legal right, we're going to quickly refund those funds because that's your right. But by the same token, if we have aggressive taxpayers whose audits are not yet finalized and coming up against the clock, we're going to move heaven and earth to make sure that we bill those taxpayers and they pay their fair share. And I think that ability to just be fair really will enhance trust in the regime. That as Harry said, we can use education and we can use support for people to whom that kind of response is appropriate. And then other taxpayers, who are trying to game the residency regime for various purposes, pandemic or not, residency is an important criteria, and we intend to apply the rules. And so I think that is kind of coming out of COVID, kind of an overall learning for us. So just quickly moving forward to wrap up, like what are some of the thoughts that I have and that we might have in the small and medium and the large space kind of into the rest of 2020 and coming forward. Certainly we think technology and digital technology in particular can kind of remove some interventions and interactions between some businesses and the tax authority. We can just prevent them and not deal with it, which allows us to refocus our resources on aggressive tax planning. We definitely think stakeholders and tax professionals are allies sometimes and with some clients, and where that works in terms of burden reduction and simplifying the system, we're ready to do that. We're always mindful that there are some errors and some self-reported issues, and I think there has to be a response for that. And then there's some aggressive tax planning where people want to have an effective tax rate of 0 on the other spectrum, and we need a very different answer for that. And so it goes a bit to the interest-based, rights-based element that I've been teasing out. And certainly when you have someone whose motivation is just to kind of follow the rules and not deal with the tax authority, you can kind of take an interest-based approach. But when somebody is taking a rights-based approach, kind of a aggressive compliance, conforming to the letter but not the spirit of the law, and trying to exploit loopholes, then a rights-based response is going to be needed. We've talked a few times about the statutory rate versus effective tax rate. It's an inexact measure, lots of flies in the ointment, but to the extent that we can start communicating in a transparent way about companies' effective tax rates, maybe relying on financial statements, maybe relying on civil society and kind of the attendees at this conference, we think that maybe shining a light on effective tax rate is possibly a route to kind of get the point across in kind of a numeric manner and in a manner that's easier for people to understand. And certainly the COVID era has shown the importance of collective action. With this illness, everybody's health is dependent on everybody kind of playing along in the system. And somebody else's inaction can cause consequences for others. And as you guys would know, that's very much the situation with tax and certainly those who don't pay their fair share. And so it is a particularly opportune time to, I think, increase pressure. Again, to attendees at prior tax co-op events, during the economic downturn in 2008, 2009, you can see those legitimate questions about the fairness of the regime kind of leading indirectly to BEPS in 2015. And so it is likely a very important time to kind of have that dialogue. And I think from an administrative perspective, we certainly welcome those kinds of conversations because as much as we work hard from an administrative capacity, we're working within a regime, a global regime, often coordinated by the OECD, and then our domestic legal regime as decided by the courts. And so, I think that is an area of shared interest to kind of look at those and say, are we getting the consequences we want? Canadian participants would see that a large number of cases have gone to the Federal Court of Appeal. Some of them are headed to the Supreme Court. And for a large number of cases, tax issues kind of headed to your Federal Court of Appeal or the Supreme Court in a short period of time, certainly would at the very least cause for reflection on those cases and kind of questioning around, do we have the right regime in place and are we getting the outcomes that we all want? And so, kind of out of COVID, these are certainly some of the top line directions that we're trying to move in. Again, closer to the action, perhaps from Harry first and then Alex. What do you see as some of the top line priority areas in each of your client segments going forward?
Sure. So, although we're still in the pandemic situation, the rest of our audit programs are resuming. As of October, all medium business income tax audits resumed, and on the GST, HST side as well. And small business audits are going to resume in November. Now, that's not to say that we're just going to flip the switch back on and everything is back to normal the way it was in February. We're very mindful of the impact COVID has had on the economy and on businesses. So our approach will be adapted to factor those realities in. A great deal of thought is being put into exactly how we resume our audit activities for small and medium businesses. And maybe I'll just take a couple of minutes to share a couple of them. One question we receive is, will there be entire industries that you stop auditing because they were hard hit? Retail, for example. And the answer is no. While we understand that some industries were impacted a lot more than others, we feel that audit selection needs to be on a case-by-case determination. For example, retail was hard hit, yes, but there are some retailers whose sales would have increased significantly given their industry and market. So, our data experts are doing very important analysis to understand the impacts on the industries, and it will definitely inform our way forward. But there will be no blanket sort of free pass for any group or any industry. I think Canadians expect us to ensure a level playing field and to protect the integrity of the tax system. So we'll take a responsible approach to resumption of activities. We're also mindful of the precarious financial position that some of the businesses that are currently under audit. So some of those audits that were sitting on the shelf from January, February that we're resuming now, what is the financial status of those companies? We're going to have to grapple with those difficult questions about continuing audits or shutting audits down, looking at the solvency, looking at the level of non-compliance, collectability issues of the tax debt. Is it likely or unlikely? We're issuing guidelines to our auditors so that they can resume audit activities and ask the right questions, determine which audit should continue. The judgment of our auditors and frontline supervisors, along with our risk assessment approaches and audit policies, are going to be all key in making those determinations. While getting back to audits, the safety of our employees is also paramount, and it's something that has been occupying our thoughts a lot lately. We're providing them, again, with guidelines on how to safely return to on-site visits in cases where it cannot be avoided. However, generally, we expect our audit work to be done remotely to the extent possible. And that's a big departure from the way we used to do work, because we used to really encourage auditors to go on-site to do the audits in a more efficient way. So as we work forward towards full business resumption, we're also going to be learning from what other countries do, which will help inform our plans. In the small and medium space, we're very active in the international community, as Ted said, through the OECD and the Forum on Tax Administration. We're actually setting up a new community of interest right now for SMEs. It's going to be co-led by CRA, and we expect that the initial agenda items to have a very heavy business resumption flavor to them. All tax administrations around the world are seized with similar questions, so I think those will be quite fruitful discussions. And while speaking of what other countries are doing, one thing that CRA has been keeping a close eye on in terms of international developments are in the realm of digital compliance. Ted touched on that a bit earlier. With the emergence of business models such as platform and gig economy, digital services, cryptocurrency, the landscape has changed, and tax administrations have to respond accordingly. At CRA, we've actually got a dedicated division, dedicated resources specifically looking at digital compliance. One of the areas of exploration is around compliance by design concepts. So, in some countries, they've implemented electronic invoicing systems where the administration gets real-time transmission of data, collection of VAT in some cases right at source, making for a bit more of a seamless tax administration. Very interesting concepts, and CRA is certainly, ready and willing to support compliance by design concepts should things move in that way in Canada. I don't think, again, as Ted said, that this means that we're not going to audit anymore. It just means it's going to free up our time and resources to be able to go, for the aggressive tax planning and people who will find a way to game sort of any system. So I don't think we can design non-compliance completely out of the system, but to the extent that we can, we would be certainly happy to be engaged in those discussions. Yeah, so as the COVID, as it persists, we'll continue to adapt our compliance activities and based on the government direction and how this thing unfolds, we will continue to evolve with the landscape.
Thanks for that, Harry. Maybe turn to Alex now.
Thanks, Ted. So large business audit resumed quite early on. by June, we were away from our priority files focus into a more normal business, as close to normal as we could get it type focus. Still a big change though, because in my program, audit teams traditionally have been on site at the taxpayer essentially full time. So they would have the space set aside at large business taxpayers, and that's where they would do the large majority of their work. So they've had to start doing that from home. Large businesses in most cases were well placed to deal with us electronically from an early stage. So they were able to get their people productive and working from home early on too. So we were a good program to resume quickly. And despite my fascination with timeliness, we're only picking up 2018, this summer 2021 and summer and fall 2020. We're really into the 2018 taxation year, which it's hard to remember. It seems like a long time ago, but the economy was quite strong in 2018. So there will be a certain business as usual looking at different tax structures that were in place in that era with a view to counteracting base erosion and profit shifting. Looking forward, the principal purpose test in the multilateral instrument is in force in Canada now, and CRA has established a treaty abuse prevention committee, which is similar to GAR committee, some overlap in membership with GAR committee. Audit, our area, is actively involved in the work of that committee, currently deliberating on what our stance is going to be to a large extent. So more to come on that. A lot of government assistance has been distributed to businesses due to COVID. And I guess there's two tax considerations that come out of that from my perspective. One is making sure that Canadian government assistance stays in Canada and isn't shifted out of Canada using transfer pricing or other methods. So it's, I guess, our understanding that Canadian government assistance was paid with a view to supporting Canadian business or business operations in Canada of multinational enterprises. And so it would be important that businesses are allocating it in a fair and reasonable way using the arm's length principle. The other aspect on government assistance is just ensuring that it is in fact included in taxpayers' income, so that their income or loss is being measured properly, taking into account amounts received from taxpayers at large, in essence, through the conduit of the government. I think I mentioned using what we're doing with wage subsidy auditing to try and get a little more modern in our approach to auditing. So looking forward to learning from that. Ted mentioned as well, there were a number of important cases at the Federal Court of Appeal or released this spring. We have obtained leave at the Supreme Court in Alta Energy. So that's on our radar for sure. We've sought leave in Loblaw, and there's some other Federal Court of Appeal decisions that are of interest this year as well. So those are some of the things that we'll be working on, and hopefully getting back to some of our normal business and continuing to work to modernize the tax system, provide some input to Department of Finance where we can on some tightening up that they could do. And yeah, I'll stop there. Back to Ted.
Thanks, Alex. So, in closing, what have you heard, or what do we hope you've heard? The Canadian tax system generates just over $500 billion or $500 billion a year in revenue. The audit functions identifying $14 billion. It's a very complex space. we have different clients. You know, we have different client segments and we have different client behaviors. And if anything, you probably got a sense that there are dozens of different levers that we are trying to leverage to help those who want to pay be able to pay, and to make it increasingly difficult for those who don't to detect and correct as much as we can. And, you know, the other thing, I guess, is around shared interest and interest-based approaches and rights-based approaches. And I think in Canada, we're becoming increasingly comfortable pushing out the two ends of that spectrum, and where people really do want to pay the tax that they owe, really pushing in that shared interest, be it with stakeholders or with the individual taxpayers, regardless of segment, to just make it as easy and as painless as possible. And at the other end, you know, for, I wouldn't say understandable, but you know, explainable reasons, taxpayers have chosen a rights-based approach right from the outset to respond in kind, because it really is the integrity of the regime that's at stake. And so hopefully we've painted a portrait of a tax authority that understands the environment that it's operating in and is working really hard to be as responsive as it needs to be, recognizing that that response isn't always the same.